This episode of Good Investing Talks is supported by Interactive Brokers. If you're ever looking for a broker, Interactive Brokers is the place to go. I personally use their service because I think they have a great selection of stocks and markets you can access. They have super fair prices and a great tracking system to track your performance. If you want to try out the offer of Interactive Brokers and support my channel, please click on the link below. There you will be directed to Interactive Brokers and can get an idea what they offer for you. I really like their tool and it's a high recommendation by me. And now enjoy the video. Hello, subscribers of Good Investing Talks and listeners. It's great to have you back. Today we are discussing Nintendo again, and I have my two superstars of Nintendo here, Ryan and Todd. It's great to have you here and back on. How are you doing in this crazy times?
Good, gentlemen. It's great to be back on. Wish it was better circumstances globally, but might as well talk Nintendo. It's put smiles on people's faces.
You already have some, yeah.
It's great to be here. Thanks. And I echo Ryan's sentiments that this is something that is actually fun to talk about. So happy to do it.
And Ryan already showed some of his papers he's preparing. I think you're preparing a big report on Nintendo that will soon come. And
yes, it is currently being formatted, and with the charts and everything, it's been a little bit of a process. But hopefully we will release it in conjunction with the video.
Yeah,
so
you will.
It depends on how long you take to turn it around, but hopefully it will come out right after we're done. So
we will link it for sure here in the show notes so people can find the report and also can read about it. And there will be also a transcript on the website. But without further ado, let's dive in a bit. And we already had, like a few days ago, the 50th years anniversary of the Nintendo Switch. So if we all go back in time and think about the situation Nintendo was in 2017, how would you reconstruct the situation of the company? And also with in mind what they have achieved since 2017. But maybe let's go in the phase before Switch. What kind of business was Nintendo then?
Sure. Do you want to go first, Todd? Do you want me to?
My comments won't be as thorough as Ryan's perhaps, but I think Nintendo at that point was trying to search for the next console, right? Wii was a huge success. 3DS and DS were huge successes, but they were still trying to kind of figure out where they belonged in the console space. PlayStation and Xbox kind of took off in another direction, and we can talk about that later. It was one of the things I wanted to touch on was just that they're really not competitors anymore. When they're wishing each other luck when the consoles come out, like that's not what competitors do, and so they had to find their own way. And I think Switch was just the perfect mix of their handheld expertise and their console expertise. And it just has been extremely successful, obviously, with everything that's come. It has some great software that launched with it. And it's just been, we all know the story since, but that was kind of the setup that I took. And Wii U wasn't a huge, didn't really take off because I think it lacked that console strength that the Switch has. And that's where I'll leave it. And I'm sure Ryan has more to say on that.
Yeah. I think you were coming off a long period where Nintendo had kind of been they were bootstrapping each successive console generation. And with each, successive generation, the size of the installed base at maturity, the exception would be the Wii, was getting smaller and smaller. And so that combined with the kind of inherent cyclicality of the console cycle had kind of branded the business as a hit-driven cyclical, which, historically it was. And that, along with the kind of disastrous release of the Wii U, which I think sold, 13.4 million units, kind of kickstarted an era of soul searching and reinvention at Nintendo. And I think they have, kind of reinvented themselves and are still in the process of doing so in a lot of ways. But probably the largest uh, change from, call it the 2017 and, from pre 2017 was they kind of adopted, I'm sure we'll get into this. We talked about this a lot last time, but what I like to call the Apple model, which is, a iterative approach to hardware where they basically continuously release, both incremental and major upgrades. And, uh, you know, not only basically the era of cyclical console changeovers is over. And so I think, fundamentally, as Nintendo started to transform its, the intrinsic nature of its business with the Switch, you kind of have to, I don't know if there's a BCAD, type of thing here, but I think that when you think about Nintendo and its past and its future, um, the game changed for lack of a better term, and that's what has kind of set forth in motion where we are today. I think it is a fascinating business and probably the most underappreciated and widely misunderstood of all of the great kind of ubiquitous global family friendly brands out there. So it's a very interesting setup.
Then let's try a short exercise and maybe like try to find from both of you 3 short points what Nintendo has achieved since 2017, since the launch of the Switch. Like your 3 highlights that come to your mind.
Gosh, I think the biggest thing to me, the most important thing to our thesis at Ensemble Capital is the digital transformation. The ability to connect directly with consumers for the first time. I mean, they have 250 million plus Nintendo accounts now. And I forget the number on Switch, maybe 90 million. And it's just amazing the connection that they have with customers. And that's always been the challenge with Nintendo from a stock investment standpoint is the cyclicality. When they launch new consoles, they have to re-win all their customers. And they have no idea how long player A is playing this game and player B is playing that game. Now they know. Now they can create a more sticky relationship with those customers, and it's going to become more of a recurring revenue type of purchase than ever before. And so it really slows down. It doesn't eliminate the cyclical nature of the console, but it does smooth them out quite a bit. And so that to me is the biggest metric, the biggest change, the biggest thing that they've done since they launched the Switch that really gives us confidence that this is not your typical investment cycle.
I already have a chart prepared for this. You can see it here. It's the what Nintendo knows about the customers, how many people play it, how many active players they have on the console. Maybe without losing the train of thought on the 3 points that Nintendo has achieved, is this one of your most important metrics you track to track the success of the Switch? This active players, this annual playing users, they define it like this?
For sure. I mean, I think that's the key. I mean, what Nintendo doesn't want, the worst thing that can happen is that the Switch gets put in a drawer and left to gather dust for months, maybe a year plus, and then people play it once in a while. Maybe they forget about it. Those people aren't going to be primed to spend money on software until there's a game that they absolutely want to play, and maybe they'll buy it then. And then Nintendo really wants people to subscribe to Switch Online, the expansion pack, which we'll talk about, I'm sure. That's what Nintendo wants is more points, more transaction points. They want you to come in and buy things on a more regular basis. And again, that comes back to smoothing the cycle. So that's all very key to us.
Yeah. I mean, not to completely reiterate exactly what Todd just said, but there are 2 things that I think are kind of interconnected. And, I think, on the hardware side, going to an iterative model where, basically the OS and the hardware evolve and get incrementally better over time, in combination with, the digital transformation of the business. So, between those two things, you create, the hard breaks and the few years of declining revenue and operating profits. Typically there'd be 1 or 2 years of losses or something equivalent to that. I think is gone. And I think one of the things that makes Nintendo so interesting right now, I mean, when you look at the macro, not only is it, I think, a good and improving business. I mean, I should say a great business that's getting better. But at the end of the day, you have internal dynamics that should basically somewhat guarantee that both revenue and margins continue to increase, regardless of whether or not money remains cheap or inflation remains high. And that is a very unique thing. This isn't a business that's trading at 20 times sales. In fact, if I we're I'm right about the thesis, um, you know earnings should continue to go, revenue should continue to go, pretty much irrespective of the macro. And I know that's saying a lot right now, but I think that's unique. And I think there's a limit in terms of the multiple compression that we can likely experience, especially given the contextual backdrop of the space, M&A in the space, what's going on in Japan. Um, between growth and revenue and margins, expanding operating margins, and just the rock solid, increasingly high quality nature of the business, I don't see how you realistically permanently lose money here over the next 3 to 5 years. And the multiple is so compressed. I don't see how even if things get dicey market wise, the stock goes much lower, at least for long. So in a increasingly uncertain world, I think it is a very unique, very safe, kind of the perfect idea to size up in scary markets, and in a way where you can sleep at night.
It's an interesting observation I also made the last days. Twinted was quite silent, and I'm also like a bit of observing on Nintendo Twitter. And Nintendo Twitter was also with this rumor about the Switch Pro, the 5th anniversary, super loud and super active. And Twitter even like fed me content from the Nintendo feed in, which is quite interesting to see how this community is active, how they've gathered the community of players that are really eager to play Nintendo and really love their products, which is quite fascinating to see. And it's also what kind of customers does Nintendo own, or to which kind of customers has Nintendo a relation, and how sensitive they are to inflation in your eyes.
So there's a nuanced answer here. I mean, to say that Nintendo is not, for example, susceptible to decreases in consumer spending is a stretch. At the same time, later on, we'll probably get into, I think, maybe the 2 to 3 variables that need to happen for, I think, Nintendo to be a home run. And in each of these cases, I think, you have a very high probability slam dunk in terms of the dynamics that are propelling kind of the self-reinforcing feedback loop. I think that's a really interesting question in of itself. But here, let's stop and kind of revert this. What was the question again?
What kind of customers Nintendo does own in your eyes, and how they are positioned in this shaky kind of times we are in?
So, as it relates to the customer, I think that you need to distinguish one of these key variables that I think will determine what the ultimate outcome is with Nintendo is Nintendo Switch Online. And if you look at the history of similar online services, whether you're looking at their console peers, you find that this is a product with inelastic demand and considerable pricing power. That I mean, if you look at PlayStation's historical attach rate over time, it is remarkably resilient and defensive. And um, you know, basically, as the business transforms, I think the core earnings engines of the business are becoming increasingly stable, increasingly resilient. And as software, continues to become, increasingly a larger and larger percentage of the business, I think the one of the primary drivers of Nintendo's earnings power won't be, it'll be basically NSO. An NSO, like PlayStation Plus and Microsoft's equivalents, have exhibited, I think, remarkable resiliency, and should drive the business forward regardless of whether or not consumers are buying less games at the margin, because I think they'll continue to play online. In fact, they might play online more, just because maybe they have less money at home and they're looking for the cheap forms of entertainment. So there's not a much better price to fund ratio relative to other forms of entertainment media than I think what Nintendo offers. So I think that provides us kind of another layer of protection that is unique.
You mentioned earlier the what audience Nintendo owns, and I recall our previous conversation where you asked for an emoji to represent who Nintendo's core customer was, and I had a family emoji, and Ryan had a whole bunch of different emojis, and I think after Nintendo released that map of who is playing age-wise, it was pretty clear that Ryan was right the whole time and I was not. I had expected Nintendo's players to be primarily between 7 and 12 and call it 30 to 40. But man, there's a ton of players in sort of the core gamer age group of like 18 to 24. And what's interesting is that time, it declines over time, and then it kind of drops off after 45. But what's interesting is, perhaps it's because I'm 40 and I've always grown up with Nintendo. That's kind of where the age group starts, where we see it as a core part of entertainment. It's
the Nintendo generation.
It's the Nintendo generation. So as our generation gets older, we'll increasingly use it as well. So that the current distribution that they have on that map will continue to move to the right. And I think that's incredibly exciting, because you're not going to have this group of this age group where people just aren't playing video games at all, or they aren't playing Nintendo. They have no emotional connection to the Nintendo IP. But as we get older, our kids get older, we continue to pass it down generation to generation, just increases the generational interest in Nintendo. And I think that's such a core part of the IP. And I think that's, not to take this off on a different tangent, but I think that's what you're seeing with some of the deals happening for like Activision, for example. There are core video game brands that you just can't replicate. You can't replicate Call of Duty, right? You can't replicate these different, so you can't replicate Mario. Talking 30, 40 years of enjoyment connected to that brand. And I think that's what you're seeing. That's why people are going out trying to buy some of this core IP, because it's just so expensive to manufacture it from scratch. And the payoff probabilities are very low, because some games will be a hit, but most games will not. And you're just burning money if you get it wrong. So it's better to have a sure thing. And it's what you're seeing in entertainment across the board. I mean, look at the Marvel universe. That's what they're doing. They're just going back again and again to the well. And people want more, because they want to be immersed in that relationship. And so we're talking about inflation or whatever it might be, pricing power. Nintendo can continue to take advantage of that if they want to. I think in the console space, there's some limitations to how quickly they can raise prices, because it's sort of like in people's heads anchored that $59.99 is the price for a AAA game. And
it's been that way since we were kids,
right,
though. It's great, it's
yeah,
crazy. Like what pricing? I mean, there's no doubt latent pricing power there, but I mean, if any industry deserves to raise prices, I mean, maybe we don't go with the what is it, quadruple A now? Was the I forget which third party dev or publisher wanted to start calling them quadruple A to raise the price, $10-15. But I do think that will likely happen in time, given the increasing cost of games and everything Todd's talking about. But I think he hits on a really interesting point that I feel like doesn't get the the light that it deserves. But we're part of the Nintendo generation, and for the most part, the generations above us, looked at video games as entirely a kids thing. And so as that generation, as we get older, I call it, the passing of the baton. As the Nintendo generation passes the baton to the next generation, basically the older generations that don't play video games are, dropping off, and, our kids, are picking it up. So you should see, a compound, you know, basically the number of total players that play video games in the world is, compounding at a very nice clip. And for whatever reason, I don't feel like that's ever much of the discussion. I mean, we'll probably talk about saturation points and things like that later on, but at the end of the day, I think the growth in the video game space is just beginning, and that is a very, very unique and interesting thing. I mean, the industry keeps getting better, more resilient, more stable. Nintendo itself is following that same path. When we first talked, they were kind of first, second inning. Now they're kind of midway through, but they still have quite a bit of catching up to do. And so as you get the digital transformation, as that works itself through, and the industry continues to improve, that creates, I think, a really outstanding, backdrop for thinking about, how this opportunity kind of plays out over the next 5 or 10 years. And it's very, very special.
And the other thing I'll just add is, right now when we're in our 40s, early 40s, late 30s, there's not a lot of time. Like, we don't have a lot of time to play. I mean, at least I don't. I wouldn't consider myself a gamer. I like games, but I'm not a core gamer. And so switching or search costs matter, right? Increasingly as you get older. I don't have time to try a bunch of different new games. Like, I want to go play a game that I know there will be a threshold of enjoyment. So whenever a new Mario game comes out, I know exactly that I'm going to have this much fun, at least, playing this game. But I'm not going to go spend $60, $70 on games where I may or may not enjoy it. I may not have any connection to it. I have a steep learning curve to get good at it. It's too much. And I think what you'll see with that chart you held up just before, Tillman, with the age group, is that engagement will actually increase as our generation begins to get more time, as we get into early retirement, whatever it is. We have more spare time and we look for more forms of entertainment. We'll turn to games that we grew up with and enjoyed. So I think the durability of the Nintendo IP is there's nothing I'm concerned about there.
Totally. Only thing I might think about adding is, and I think Todd hit the nail on the head when he was talking about Marvel. One of the things that, there are a lot of things that I think makes Nintendo's, cash flow, I think, extraordinarily stable in a way that isn't properly understood. NSO being a big part, but, this is, becoming more and more the case with time. And I think part of it has to do with evergreen IP. With Marvel, Disney acquired a company that had, basically boundless source material, where you had kind of built-in affinity across generations and cross-culturally. It wasn't, I don't think, as universally beloved as something like Nintendo, but I think the idea of, Todd saying, I don't want to go learn a new game. I mean, I originally bought the Switch solely to play Zelda. I didn't play video games for probably almost 20 years, but I had beaten all of the Zeldas in the past, and that was the game that kind of started it all for me. And I went out and purchased the Switch, solely for that purpose. And let's just say it's kind of a stretch to call video games high art, but if there is high art that are video games, this is about as close to it as it gets. So um, that kind of, I don't know, it brought me back to when I was 10 in a way that was incredibly fun. I know Todd has small kids. Hopefully I will soon. But this is very much something that not only I think is the Nintendo generation. Should they want to be reintroduced to Nintendo games and go back to them, um, is very much primed to pass the things on that they know. I mean, in many ways, video games is like, I don't know, cars to our parents' generation, and the freedom of the open road. There are a lot of parallels, but I think one of the things that makes our generation unique is we were the first to kind of fall in love with video games, and passing that on is not a fad. I mean, I think even Munger said something like that, or confirmed that at the Dow Jones meeting, which hearing him say video games are here to stay was, I guess, not surprising. I think it's obvious, but
Well, the one analogy I like to use is just a sports franchise. Whether it's like an American football team or Manchester United or whatever it might be, it's a way to connect generations, right? Like my son and I will always be able to share Mario. He had a Mario birthday party, and by the way, I'm not pushing this on him. Like this is not something where I'm like, you have to play Mario. Right? He's doing it on his own. And then we're saying, hey, we start connecting that way. And so it'll continue, and that's what Nintendo has to make sure it does, is continues to delight generation after generation, the way that a football team or something like that might do, and that way it continues to build that brand and that generational connection, which is a hard thing to do. It's hard for grandparents and grandchildren to connect on lots of things because of their age and their experiences, but they can always go back and talk about with the Cincinnati Reds or whatever sports team you're talking about, because they have that shared experience, and those are rare things. So I think it's such a key part of not just intergenerational communications, but global communications, just things that people can relate to and share without having any sort of a background that's similar. We can always talk about Mario or Zelda or whatever it might be.
well, this is actually, I think, another thing that I think is, in terms of, we want to break the buckets, Nintendo into buckets, things that I think are kind of dramatically underappreciated despite consistent execution, and where things are kind of basically staring you in the face. I think people are dramatically underestimating, Nintendo's progress in terms of better monetizing its underlying IP, and particularly in visual content. I mean, as far as the entertainment flywheel, I can't think of a more powerful feedback loop, frankly, than these big blockbuster partnerships with Illumination. To bridge along those kind of shared experiences that you have, but it's just another way to introduce your kids, and to get get Mario out there. One of the biggest risks, and I think they're doing an outstanding job, is not connecting with the next generation. I don't think that's reasonably likely whatsoever, but the impact of movies too, I think, is going to be quite a bit. I mean, the market is clearly discounting nothing in there. I think they could. I don't know if you guys. I should have actually printed this out, but if you go into, I think it was the annual last year was the proxy filing. But in it, they were Chris Meledandri, the CEO of Illumination, which, uh, I should say up front, I've never seen a more majestic, reoccurring box office money machine than Illumination. I mean, have you guys looked at their historical find? I mean, it's bonkers. I mean, each movie's cost is between like 67 million and 76 million, and I think their average box office return is something like 640 million. So if marketing and production are 1-to-1, I mean, everything they've ever done on average is done 5x. So as Nintendo being their partner, at least in the animation space, I've just know it's a thing to behold. It's beautiful, in terms of the economics of these movies. But if the average Illumination movie does 640 million, what do you think Mario's going to do with Chris Pratt and all of that stuff? So people kind of they get focused on one thing with Nintendo and they don't follow along or really pay attention to the evolution and the ultimate impact here. And this is what I was getting to in the proxy when they talk about appointing Meledandri to the board. There's a little footnote in there that basically gives you an idea of what at least the front end in terms of box office is going to be, and I think it's 2% of 2020's full year revenue. So that's 280 million up front. So if you use that as a general proxy for what Nintendo will earn, on the front end, and then as they build up a library, they will retain the full global distribution rights to all their IP, all these movies, visual content, TV. So that will build too into kind of a double-engined reoccurring revenue center, and I see no reason why they are. I mean, I think with the announcement of the investment that they made, I think it's 440 million USD last November. They don't break down specifically what's going to be spent, where and how, but when you look at the production cost of an Illumination movie. We don't know the split. We do know that Nintendo has taken production risk here. This isn't simply a royalty off the top of sales. So, but it's clear no matter, you could run the math a bunch of different ways, but basically between what they've already expensed with Super Mario and what they have dedicated to investing in visual content in the future, you're looking at 4 or 5 movies. And so what that tells me, and I don't want to over embellish it, but they clearly have an NCU or MCU like vision here, where that with the amount of money they're pouring into it, I see no reason why they can't get to at least one movie per year, say within the next 5 years. So not only are you going to have these big franchises, constantly releasing and becoming a part of the cultural conversation, but the market is basically discounting these earnings engines to zero, and I think they can start doing somewhere within, say, my forecast period over the next 3 to 5 years. I see no reason why they can't do something in the odds of $500 million to $1 billion plus just from movies, and TV. So I don't know. I think I might have gone off on a little side point there, but it relates to the larger question of shared values and making sure that Mario doesn't go the way of, say, Mickey Mouse. Not to speak bad of Mickey, but he is less relevant now than he was 40, 50 years ago.
They also have a lot of I saved them for you. They also have a lot of marketing power. They could partner with other brands to do marketing. These are the Haribo special editions with Super Mario, which might be also something to put the brand in place before the movie comes and get connections to customers. You're in Omaha or both?
Kansas City, yeah. About 3 hours.
We have to at the meeting.
Oh yeah.
Then we have a plan. I saved them for
all
them.
Right. Wonderful. I'd eat Haribo over peanut brittle any day of the week. So.
So they have this marketing capability that's quite strong, and other brands are willing to partner with them, even pay Nintendo to get the Nintendo brand in front of people.
Yeah, I mean, it's nuts. I mean, you hit on the other part. You kind of break into, what I was saying about movies and, TV visual content. Similar deal with theme parks. We just talked about merchandise licensing, and they're doing it in the way that Nintendo does everything, which is painfully slow, steady, methodical. But inch by inch, it's getting bigger and stronger. And people act like there's a few articles that have talked about Nintendo wanting to be the next Disney. I don't think Nintendo wants to be the next Disney at all. I think Nintendo is taking pieces of their playbook to improve their competitive position and grow their business. But I don't see Nintendo building a huge, massive merchandise licensing infrastructure like, say, Disney does or has, to run that giant machine. But I think maybe you guys could correct me, but I think the last reported number I saw was Disney did something like 56 billion in merchandise licensing. Nintendo is never going to have the infrastructure, it's never going to get close to that. But can, merchandise licensing get to, say 1 to 5 billion a year at maturity? I don't think that's a stretch. I don't think that's aggressive in time. It might happen more slowly than you'd expect, but I think it is definitely. I think there's real potential there, and the same goes with theme parks. This is another element of the business that's getting discounted to zero, and yet I think we have extremely high visibility into there's going to be 4 parks open say by the end of 2027, and we already have a second park opening in Super Nintendo World in Japan, the Donkey Kong exhibit, and they've announced that they're planning new areas within the other 3 parks as well. So, again, we don't have the specifics of, the Comcast contract, but I've, been able to go back and look at, the royalty rate on theme park ticket sales for Harry Potter at the beginning. And, there's a couple other ways you can triangulate it, but between those 4 parks, if you're trying to figure out the economics, somewhere between, call it, if each park has 2 lands, 8-9% in terms of a royalty on ticket sales, given the power of the IP to drive attendance. And I think there's 40 million, 39, 40 million on average that, people that attend each of those parks every year. So it's quite easy between those 4 parks to get to 300-400 million in recurring revenue. And, it's not talked about a lot, but, there's also Universal Beijing, which I think has 20 million visitors a year. And, that would be a great way to use Pokemon, because I think Pokemon's bigger in China. But eventually, if you just assume those, 5 parks are it, we have a very clear line of sight to another $500 million, basically pure margin royalty stream that's worth a very high multiple, certainly more than 20 times. That is completely ignored, but also I think critical to reinforcing this shared cultural weaponized nostalgia, for lack of a better term. And it's finally starting to reveal itself in the financials, or it will. All of these things I think will become more meaningful in a material way within call it the next 2 years, and none of that is getting any credit, which is interesting.
It's also quite interesting if you look at the Lego annual report. They also said something on the Mario sets they sold, and it was one of the fastest selling sets they ever released. So it's also an indication about the power of the brand and the merchandise they have.
It's good. They're just very, very careful. I think I read, maybe you guys have read this too, or maybe it's just recollection that I'm getting confused with. But I think I read something with the Lego sets that they spent 5 months going back and forth arguing over Mario's hair, which is dedication to protecting your IP, to say the least. But again, they're slow, but I think they're making the right choices, and very methodically building a very powerful, kind of supporting pillars to their core business.
Yeah, no, I think that's something that they get criticized for. I mean, they are extremely protective of their IP, like to a ridiculous extent sometimes, where people will develop things on their own, and Nintendo shuts it down, and you hear people complaining about it, like, why didn't you let us do this? We love the IP so much, and Nintendo is just defending it like an artist, right? Artists don't want people taking their stuff and messing with it and putting it back out there and making money. So that's misunderstood about the Nintendo cultures. They do see this very much as a work of art. And so there is some concern that they push too far. And I think that's one of the reasons that they've had trouble maybe expanding into mobile, for example. Like, they want to control they want it to be exactly the way they want. Maybe not the graphics, but they want to make the monetization exactly the way they want it to be. And it may not fit with what's popularly accepted as a way to monetize mobile. Like, for example, they don't want people spending $20,000 on Mario Kart Go, right? They want people to pay a flat fee or maybe a small fee and play the game and enjoy it. They don't want to.
Yeah. Todd's being polite. They don't want to rip kids' eyes out with Vegas-like casino monetization tactics. I mean,
right.
And this is one of the things that it's like there's quite a few people on the sell side that I've never really understood in principle. I mean, I guess I do at a high level. Nintendo thesis that's built around the mobile segment. To me, it's kind of always quite obviously been about the console business, and mobile is a free option that I think believe it or not, will still kind of land deep in the money with time. But it's hardly necessary to to the kind of core investment thesis. But I just am continuously shocked when here we are with a brand that core IP is basically cartoon characters, and where you have basically a 40-year history, call it a deep reservoir of trust with families, and through generations. And the idea, the fact that people don't see the risk in approaching your customers this way. I mean, it's not that I have an issue with, say, gotcha monetization mechanics. I think when they're marketed the right way, adult, they can be fine, and that's great. But when it comes to Nintendo, and you think you have a 100-year business plan, and you are concerned about the permanence of your art, and you also take that customer relationship with a kind of deadly seriousness. I don't know why. I can understand why people would want more. What I don't understand is why people don't seem to recognize or grant management's point of view, which is, I don't care how much money we're leaving on the table. We're not going to put we're not going to put the company in a position of, headlines where we're, a 6-year-old or a 10-year-old or a 14-year-old kid. We're basically using casino-like tactics to pick their pocket. I mean, it doesn't make sense to me. And I actually think that not only it took me a minute to come around. Not only does how they've dealt with mobile, I think, teach us a lot about what long-term really means. But, I think that being patient and waiting for the pitch to come to them is the right move. And I think, there's various tea leaves here, but, you have the recent announcement with JV with Niantic. So, you're going to have multiple games there. You have, Nintendo was basically the company that invented the exercise video game genre. And Peloton hasn't been doing too hot lately, but when you think about things like Ring Fit and what are there? I think there's a 14 million installed base there. Connected fitness, through connected devices, i.e., peripherals, is kind of what Nintendo does. They've done this JV with Niantic. The first of this future partnership was basically, I think, a giveaway game, but Pikmin Bloom is basically a walking game, and there's a really excellent of all the metaverse AR mixed reality type of applications out there today. I mean, one, it's ironic that Nintendo's the only one that actually has a game on store shelves that people love with Mario Kart Home Circuit, but um, it's interesting to me that they have kind of taken a step back, really reevaluated where they wanted to go with mobile. In the interim between, I'm not sure exactly when we did our first one, but they've started to use mobile gas, gaming as a service, live service, uh, as their kind of primary monetization mechanism, because at least with subscriptions, consumers know what they're getting. It's not like a 6-year old spending money and getting word, it's coming up tails each time. uh, but I think that uh, the main of all of the applications, the ones that is the most interesting from a commercially perspective is AR, metaverse, mixed reality, when it comes to working out. Exercise based gas is what I would call it. And we will see, but I wouldn't be surprised if all of Nintendo's Niantic partnerships are basically exercise based connected ecosystems, for lack of a better term. And that's the way in which they go, where the nature of the service is subscription. You pull the the gotcha stuff out, primarily, and I'm sure, with Nintendo's expertise in hardware, I mean, really no one's done it better from an innovation standpoint. I mean, it's a perfect way to continue to sell peripherals and to, kind of meet their larger mission, which is getting people out into the world, into community, versus, Zuckerberg's dystopian vision of us all sitting in rooms, plugged into the matrix. So, I think it's I think the death of mobile is greatly exaggerated. That's the beautiful thing about when you have IP as powerful as Nintendo does, and your brand is ubiquitous like theirs is, because you have unlimited at bats. I mean, that's the other thing. There is no rush. Like Nintendo, all they have to do is sit on their thumbs, kind of like investors, and wait for an absolute no brainer to come across their plate. And maybe they strike out 3 times in a row. I mean, Pikmin Bloom. I mean, I'm almost certain it wasn't intended to monetize at any level, on purpose. But how many companies can just whiff and whiff and whiff, but eventually they're going to connect. And if you can compile 7 to 8 of those games over a 5 to 10 year period, that becomes a pretty lucrative, very high margin, very good business. So, I think mobile is probably the least interesting part of the larger story now, but I don't think it's not interesting.
It's also like, if you think about the terms customer acquisition cost and lifetime value, it's also like a good customer acquisition cost not to do certain forms of businesses, because then are parents willing to pay a premium for Nintendo devices, not being sure that they don't get spammed with advertising that is disgusting, not that the kids just like buy for hundreds of euros stuff they don't want to have on the computer, or don't see zombies for the 6-year-old, that Nintendo offers this quality, and they can really trust them for a lifetime. The lifetime
Exactly.
value
Well,
is
that's what
increased
it's all
by this.
about. That's what it's all about. There's a great Nick Sleep quote, um, where he talks about, through his experience, the one kind of common trait that unites the best companies, with the best management teams. He calls it the ability to avoid locker room talk, essentially, to not care what the zeitgeist did, just stay focused on the mission. And I think the quote ends, we've learned in the in the long run, that's all that matters. And I think it was in reference to Costco. But this is, I think it's ironic, but I think one of the things that I find most attractive about Nintendo is one of the things that I think most people hate, which is their refusal under any circumstances to sacrifice their principles, for short-term BS. I think it's a special thing, and I don't think you find companies that are as clear about their mission and as dedicated to maintaining its integrity over the long run, and but but also pushing it forward and doing smart and creative things.
Yeah, I think it's a tricky balance for Nintendo because on the one hand, having that long-term 100-year plan makes a lot of sense from like a principle standpoint, but when you think about how fast the entertainment business is developing, they also have to be able to be nimble enough to respond to it. And one of the things that we really liked was that, I forget which report it was, but they talked about how we're an entertainment business, like we understand that, and historically we haven't taken as many risks, but we plan on taking more risks going forward. I mean, that to us was a really good comment. And Nintendo management is constantly cryptic, so it's always hard to be like, yep, that's what they're talking about. But to us, it seemed that they are intent and that they understand what they have to do to remain relevant. Because going back to, I think we talked about this in the first video, but no one at Nintendo wants to be the last generation of leading Nintendo, right? Like that's a core part of this. So they have this 100-year plan, but in order to do that, they have to stay relevant. So they can't not invest, and they can't just ride their historical success. They have to continue to invest, and that's part of the theme parks. It's part of the movies. Everything kind of loops in. It's about diving deeper into the content, becoming more relevant, and that requires them to make changes, take risks, develop new products that they may not have done in the past. And we are more confident than we ever were before about their ability to do that.
Yeah, 100%. I mean, I think that's the perfect counterbalancing point. And I just add that while I think they're getting better at it and smarter, and finally focused on the right things broadly, I think no one can look back at Nintendo's history and not see a company that takes big calculated risks. Like this isn't a company that sits on their uh, ass, for lack of a better term. I mean, they're ambitious, and they're ambitious as hell, and they're fearless, when they lean into something. Which is, I think what was so interesting. I mean, outside of everything they're doing for the core console business, putting that much money to work immediately with movies, putting Melisandre on the board, all of these things. Here's an example. And in fact, I think this was interesting. Nintendo subtly changed their historical reason for their overcapitalized balance sheet. Historically, it was always about, maintaining reserves, to basically protect. It was a hedge against failure in the console cycle. Well, now it is, I can't remember the exact words, but the emphasis, in the last, I think November was when I remember reading what I would, but they put the emphasis on movies. They basically said, we're going to really lean in hard, when it comes to visual content. For this reason, we have to maintain our ability to continually take shots on goal. Luckily, they'll be generating so much cash. It's going to be difficult. They'll have a lot of money to reinvest, but movies is something where they can really lean in, get a huge return, where it is genuinely and commonsensically synergistic with the core business. In a way that will certainly drive console and software sales. But also, and most importantly, staying relevant. So it's not, at the end of the day, something where they are they're not oblivious to building and growing the business. It's just, I think people want them to focus on what they want them to focus on versus what they are focusing on. And I agree with Nintendo. I'd much rather have them focus on building movies that make you cry, and building affinity and deepening their relationship with their fan base this way than squeezing out an extra $20 a month, buying more rubies to buy some in-game item in a mobile game. So reason people could disagree, but I think that no one that has actually objectively analyzed who Nintendo is as a company, as a culture, can say that they don't, they don't take smart, calculated risks, that they are, kind of insular and stuck in the past. I mean, I just don't think it kind of holds up to scrutiny on any level. So I'm personally excited to see them start making big bets again. And, in November, we saw them kind of take the bazooka out with roughly 2.7 billion in online network infrastructure, expanding their game development frameworks.
I have the chart here.
Um, Basically, various ways. I think internally they're building out their own, live service expertise, expanding their, software output and the types of software that they create organically internally. 2.7 billion is a big, big bet. More than enough to fix their technical debt and online infrastructure to build out a, server base that is as state of the art as can be, to fix online gameplay in a variety of ways. I mean, basically, the every weakness that they had up through November is now basically concretely being fixed, and with more than enough money to do it right. And on top of that, they're expanding, making another big bet in movies and TV, and putting that cash to work. Which if I had a dime for every person that's told me the cash is just going to build up and they're never going to reinvest it and they won't return it, or I mean, I think we can finally say this question has been settled. I mean, they even bought back $1 billion worth of stock last year. So I think when it comes to capital management and reinvesting for growth, the old narrative doesn't really hold up anymore. That's exciting to see.
What will be the or go ahead, please?
No, I was just gonna say, if you looked at the most recent Direct, all of the Nintendo games that they're first party games, they emphasize the multiplayer, they emphasize the live games, and that's something that they couldn't do when they started Switch. I mean, they just didn't have the infrastructure really to do that in a meaningful way that was dependable. But I've played a number of times multiplayer with friends across the country and have never experienced some of the technical problems that other people have said. Not to say we haven't dropped off, but at times, but I mean, that happens with all of my technology. Yeah. and so, I've never felt like it was subpar in any way. And I'm sure, and I'm not an Xbox player or a PlayStation, and maybe that service is better. But again, like I said, when we first started this conversation, like they're playing different games. Like what Nintendo is doing and what Xbox and PlayStation are doing are separate things. So I don't think you can compare the two.
I agree. And to Todd's point, why they are, their online, infrastructure, all, prior to November, before they took out the bazooka, I think in a big way to make a big statement. A lot of the issues, for example, online play with respect to mobile, a lot of the old, first gen Switch games, their online gameplay was basically run off an 18-year-old server system. Nex, I think is called. And, they have basically, I think Monster Hunter Rise was the first game released where, that was totally built from the bottom up, with the new system. But, since then, and you've seen this with Nintendo Switch Online, Nintendo has gone back and patched and fixed everything, so I think eventually, I think we're basically already at the point where for the, types of games that are Nintendo's bread and butter, at least on a first party level. I mean, it's ludicrous that we need to talk about, split second. I mean, Mario Kart does not require, you're not playing Call of Duty. I mean, I can understand that, but I think that's one of the things that's so exciting about these recent investments is, clearly, I think a lot of this investment isn't necessarily for their first party games. I think it is to lay the foundation for third party games, because in many ways, bringing free to play games and AAA multi-platform games from the likes of EA and all of the kind of big developers that haven't put their stuff on Switch. With the upcoming release of more powerful hardware later this year and these investments, you're setting the stage to bring all of that to the platform in a way that faithfully recreates that kind of elite level of online gameplay, for lack of a better term. So I think in the end, it's about bringing the third parties to the yard now and getting all that stuff fixed, and just another way to kind of drive engagement and ensure that no one's Switch is sitting in the back gathering dust.
What do you, if we look at these cash utilizations with this chart, that's quite interesting. Where do you see the return they will get on these investments? What kind of return should this investment have?
Monstrous. I don't see it as I think they're putting in place the infrastructure that is required to kind of press and leverage their position to, people say that Nintendo's not a platform business. My ass, it's not a platform business. I mean, on a gross revenue basis, I think in the November report, they talk, for the first time ever, third-party games, they account for them on their financial statements, sales from third parties, as net revenue, which is basically a pure 30% margin from the eShop. But on a gross basis, which is the apples to apples comparison you have to make, now more games are sold, from third party development. And these aren't indie titles either. These are, major packaged software, because by definition, indie titles and various forms of add-on content sales aren't included, in the software metric. So this is genuinely becoming a platform where more people are playing games that aren't named, that were created by firms that aren't named Nintendo. And I think that a lot of what they're doing, both on the hardware side, is to, keep that, the network effect accelerating. And I think the momentum is incredibly strong. And for a bunch of reasons, I think it's a near certainty that you're going to see not just a flood of new games, but from third parties and the major ones, but also subscription services. I mean, in my letter, I go through all these different clues, but one of them is a job opening for EA, where I'll tell you, it's in regard to Madden, but specifically their EA Play live services, subscription. And I don't think I've ever seen Nintendo mentioned on anything EA ever. I mean, I think it's been 10 years since Madden was on another Nintendo system, but their executives have come out on multiple occasions and said, "There's just no way. The hardware is not powerful enough. We can't do it." And then strangely enough, surprise, surprise, at least if you believe the original timeline of when the Pro, or I think it'll be called hopefully the Super Switch, the Super Nintendo Switch. But all of a sudden you started having, executives like, EA's start talking about how they're going to bring all their games and how they would prefer to bring their live service games. Who, in the past had said, straight up, we can't do it. And you could look at something like FIFA and understand why. FIFA 2018 is the same as FIFA 2022 with just rosters and names changed. I mean, so you can see that even with this game that's 5 years old, they were up against the limits of it. Anyhow, the point is, just with EA, if you could sign up for a subscription service and get access to, I think they don't have Battlefield, or Call of Duty, it's Battlefield, but all the sports annuities like Madden on a Nintendo system, 5% of the installed base of the Switch, would easily do that. And that's, take 30% right off the top from that subscription service. And just there, you have something meaningful. And then, if they're going to let EA Play onto the Switch platform, it logically follows that, something like Game Pass, would be suitable there too. I just think there's a lot of clues that all point in one very specific direction, which is Nintendo does care about third parties, and everything they've been doing in these last few years is geared towards that. And I think that's really, really exciting, and it's yet another element to this story that I think is not priced in at all. I mean, think of what happens to NSO, for example, if Microsoft does a tie-up with them with Game Pass, just like allowing EA Play. And I don't know why EA would be hiring for the Switch for a live subscription service if, third-party subscription services weren't going to be allowed on the platform. If you believe that, or if you believe that that's happening, it makes total sense that Game Pass would come. And if all of a sudden Microsoft could start, offering NSO to their installed base, the numbers get, pretty insane. And this actually goes back to a video that came out about a year ago. I think it's called the Stack event, but it's one of Microsoft's internal development conferences where they speak to developers about what they're doing. And if in the background, there was like 2 weeks before this, there was a Phil Spencer live stream. And in the background.
Oh, he dropped. So we lost Ryan for a second. I hope he's coming back soon, but you have something to add? Hey, Tillman here. I'm sure you're curious about the answer to this question, but this answer is exclusive to the members of my community, Good Investing Plus. Good Investing Plus is a place where we help each other to get better as investors day by day. If you are an ambitious, long-term oriented investor that likes to share, please apply for Good Investing Plus. Just go to good-investing.net/plus. You can also find this link in the show notes. I'm waiting for your application. And without further ado, let's go back to the conversation. And also, if you think about the customer relation they have and like this customers they acquired quite early, it's quite fascinating if you look at the last presentation from November, how these customers are willing to like upgrade the existing systems. Like you have this 5 years of lifetime span, and with the Switch Pro or Super Switch or whatever comes out, you will have another unlock of this buying cycle. So you have already like a customer base of like, let's say 20 to 30 million. If you offer them a great product, great update to solve some bottlenecks, they are already in touch with you and love your product and willing to upgrade.
Yes, and we saw some of that this past quarter with the OLED launch. If you look at the overall units were down year over year, but if you looked at just the people who bought the regular Switch or the original Switch, and you combined the OLED and original Switch sales, it was actually up. It was light that really pulled things down. And so what I think is happening is that your people upgraded. So if they had a light out of necessity during 2020, during COVID, when there weren't original Switches available, or if they wanted to buy a second one for their house, maybe now they're upgrading to OLED. And by the way, OLED's great. I was skeptical. And when I got mine delivered, I said, this is just a tremendous upgrade. In terms of the design of it, it's a much better functioning Switch than the original. The screen is bigger, it's brighter, the colors are more, it's just a fantastic experience. And I was really impressed with the ability to transfer all of my games and status on the cloud. It was pretty seamless. It's not perfect. It's not Apple yet, but it's pretty close in terms of when you upgrade to a new iteration of Switch, it's all going to connect together and your games will be there with a couple of clicks. Like I said, it's not as seamless as Apple where you just sign in and everything's there, but it's pretty close. And it wasn't a struggle for me at all, especially since most of my stuff was downloaded software versus physical software. But even then, your save data was all there and didn't lose anything in the process. So it was very impressive. And I think, for us, there's been a lot of talk, obviously, in Nintendo circles about Switch Pro, what it will look like. I don't know that it's going to be this super jump. And Ryan might disagree with me when he comes back, but I think it's really this more successive iteration of Switch, where it gets a little better. little better. It's sort of like iPhone generations where, there's the SE model, there's the core model, and then there's the Max model, right? And what happens is when people upgrade, what happens first is the lowest end of that model upgrades, right? And I think that's happening with Switch, with people who had light upgrading to OLED. It's just a far better experience. And we think that's going to happen again. And Nintendo has to continue to improve its hardware. And Ryan touched on that with the third-party developers. They need to make sure that they can plug their games, they can port their games to Switch without losing a lot of customer satisfaction. So Nintendo has to iterate, but as long as they continue to hold the Switch OS, that would be, that reduces the risk of customers having to be re-won or re-brought into the ecosystem. Makes it so much easier for Nintendo just to continue to generate recurring revenue.
If you think about the ecosystem, you also have to think about the developer ecosystem Nintendo is building over time, and it's also the other side of the trade. And I've talked to developers. They said they started to convert their games to Nintendo. They do it once, and then they have the routine, and they're able to do it quicker and quicker. That's quite interesting. We see Ryan is back.
I'm back. Sorry about that, guys.
I was just making the point on the developers ecosystem that Nintendo there also has some installations in the development departments of certain developers. I talked to the developer at Nintendo, so they now can easily switch their games also to the Switch ecosystem. And with the Switch Pro, maybe which might be the end for our interview because we're running out of time at this point. What bottlenecks do you expect the Switch Pro to solve, and what innovations do you expect Switch Pro or Super Switch to solve?
A lot. I think, in terms of bottlenecks, I think the two biggest and most obvious is, the ability to play current gen hardware. And without or playing current gen software that requires more powerful hardware. So in terms of how they're going to go about it, there's a lot of things that I think are key to bringing it all together. First of all, you need to be able to eliminate this, not all of the cyclicality, as Todd was saying, but, you need forward and backward compatibility in terms of game software. And I think one of the, I kind of joke around with my COO, the Switch is like diamonds, they're forever. Or it is forever. And that doesn't mean people get caught up in semantics and, confusion, or, whether it's a pro, whether it's a revision, whether it's a next gen. The point is that, the software, both first party and third, is evergreen, across, minor incremental, i.e. revisions, improvements like we've seen thus far, and what I think will be the first major iterative upgrade since the Switch has been launched, which is what the Pro will be. And, if you get into the details of what I think the chipset or the new system of the chip that will be, in the next, call it generation of Switch family devices, it is going to be, I think, the Orin. The chip is the T239, which is a variant of the 234. But the point is that changes a lot of things. For example, on forward and backward compatibility, there are a variety of secular dynamics here that are making technologically, at least technically, obsolete hardware a non-issue because most of the processing is offloaded onto servers. I mean, for example, I can play on my original Switch the new Guardians of the Galaxy game because it's done in the cloud, and you would never know. I mean, basically, there's a variety of trends that all abstract away the hardware layer, and you even see this with the I don't know if you saw this, Todd, but when they did the beta for Switch Sports, there was a copyright. There's a picture of it I have in our report, but that shows that Nintendo is now using FSR, which is Fidelity FX Super Resolution. And so, one of the things about the Pro is that it's going to have DLS 2.0. And because of the immense, kind of upgrade, I think the Pro, the chipset's going to be roughly 4 to 8 times more powerful. And then when upscaled through DLSS will be essentially equivalent to current gen hardware. I mean, the chip itself is as powerful as a PS4 Pro, but through AI, and upscaling technologies with DLS, basically you won't really be able to tell a difference between PS5 games and third-party games played on the Switch Pro. But one of the things that was interesting, and specifically as it relates to older hardware, was to see this FSR being implemented into Nintendo's, existing first-party games. But what is FSR? FSR is like DSL 2.0 light, in that it, basically extends the life of older hardware. It's like getting an upgrade without paying for it. Does a lot of the same upscaling issues and frame rates, but it's hardware agnostic, unlike DLSS, which requires a much more powerful chipset that has like tensor cores and things like that. But you're seeing Nintendo. The other interesting thing about this was Switch Sports was done in the graphics library of AGL, which is the same graphics library for Breath of the Wild, Mario Odyssey, all these games. So what that means is that basically they can just flip a switch, and all of a sudden, all these older games are running at a perfect 60 frame rate per second. All of the things that people complain about, when it comes to the older hardware relative to the new, even the old hardware should be able to run these games relatively, perfectly. Games that did not work very well, like The Witcher. These big games, will, basically get the benefit as if they had more powerful hardware and better software by Nintendo simply flipping on this FSR switch. But, you have the rise of third-party game development engines, like, Epic's Unreal. All of these things, the transition to the server side makes, the technical specs of the hardware you're playing increasingly less relevant. Another thing with forward and backward compatibility that I hear people talk about, where they say that the architecture is different. They need to have a Tegra chipset, and now that will create a break between software in terms of what is playable. That's nonsense. NVIDIA's core. With Apple you have the iOS. With the Switch OS, it was created from the bottom up with Nintendo and NVIDIA. It's called NVN. And everything NVIDIA does, even in principle, is meant to be forward and backward compatible. I mean, there's a bunch of management quotes that I could pull out here, but there will be no forward and backward compatibility issues. There might be a few games like you saw on the 3DS that are not backward compatible, as a way to, some fragmentation I think is good as you go from minor to major upgrades. But at the end of the day, the OS is, already there. And in fact, one of the NVIDIA hack that was reported the other day, I'm sure you guys saw it, in that code that basically the leak, you see NVN2 and references to DLSS and all this stuff, which basically, is the 17th hard confirmation that the Pro does in fact exist. And more, I think, interestingly, more importantly, is there will be no, it's not like the Pros will need to have an Orange chipset and a Tegra chipset to run the old games flawlessly. The Orange chip, the Orange system on a chip was built literally from the bottom up to seamlessly blend with all of the other, this is kind of maybe a too much nuanced conversation to go into detail, but I don't think hardware or software will be an issue when it comes to maintaining Just like an iterative hardware model makes hardware obsolete, because at the end of the day, it's not about the hardware, it's about the software, because the hardware is just going to get incrementally better over time, and small revisions and then bigger leaps, kind of like we've seen with generations in the past. Um, uh, it's I can't even remember where I was going with this originally, but the Pro, I don't think you're going to have any big fragmentation in the game base. All old Switches will be able to play new Switch games that come out or release, Nintendo first party IP that's released in the future, and all old games will be able to run flawlessly on the new hardware.
Now Todd had to leave us, and now I'm still alone with Ryan. Bye bye to Todd, who sadly had to go at this point of time, not dropped out like Ryan before. It's a tricky thing to record in these times, but then you also have the feeling, comparison to Nintendo Switch Online, if you sometimes drop, it's no problem. And you continue the game a while later. Can you maybe elaborate a bit more on what you found about the forward and backward compatibility? Because it's very interesting.
Let me kind of sum up the the forward and backward compatibility issue, or I call it the intergenerational hardware thing. Long and short of it is, even despite, or I should say, as the technological gap between older hardware and the newest Switch widens, older Switches will run new games both natively and online via the cloud, while newer, more powerful Switches like the Pro will run older games natively and through emulation. Emulation is, think of Zelda, all the classic, vintage retro games. But you're already seeing this kind of the hardware layer extracted away. Today, you have Guardians of the Galaxy running on the Switch. You have Ubisoft's Assassin's Creed. You have Capcom's Resident Evil. All of these, technologically substantial games already run on the cloud on the Switch today. So, that's kind of, I think, a preview of what's to come. As far as ideas that, the hardware won't be compatible, and, that developers will have to go back and kind of patch and change their existing games to work on older hardware or newer hardware, none of that's true. The Switch OS was built, hand in hand with NVIDIA, and I don't one of the things that kind of shocks me is because NVIDIA is very clear about this throughout, their conference calls or whatnot. But, the Switch OS is basically called NVN. That's the API. And it was custom developed with NVIDIA, specifically for scalability as well as compatibility across form factors and generations. Few investors, I think, really seem to understand it. At the end of the day, maybe I'll send some company materials when we finish this up, where they've confirmed that Jetsons from Maxwell to Pascal to Orin, all of these different hardware architectures are all fully compatible with the Switch OS, just like all of Apple's are. So the point is that I don't think there'll be any fundamental bottleneck there. But I do think that this actually, and we haven't had a time, any real chance to discuss this today, but one of the elements that is different now versus when I first bought the investment was building in some level of planned obsolescence. It's a big part of the Apple model. I think it's a big part of what Nintendo's doing now. This is, there's seen flawless compatibility between, call it generations over 2 to 3 years, minor upgrades. But, you can't play, if you have an iPhone 6, and you try and run, apps today, it's going to break it. So there's some level of kind of planned obsolescence that is kind of at the heart of this. But at the end of the day, I think the Pro will definitively show Wall Street, or let me say it a different way. if the Pro is released, if we are indeed correct about more powerful hardware coming in the back half of this year or early next, if that happens, and you have what is essentially a next gen console or changeover, and it is you see flawless forward and backward compatibility between this kind of break, this console break. Uh, there's no argument left with respect to whether the company is cyclical or not. It is literally insane to argue that the old standard console cycle will still be foundation. Like, you just can't make that argument after this point, and that doesn't mean Wall Street will price it in immediately. But there is no plausible basis, I think, if you're intellectually honest at that point, for acting like there's any the historical cyclicality that was the Achilles heel of the industry. I think this is the point where that is definitively done and put away forever. We've seen it with Sony. We're about to see it with Nintendo. And I think that is the point where people are going to really start to kind of wake up en masse and reprice the stock.
Maybe let's talk a bit about the cherry, or the cherries on the cake, or if you say it in Nintendo language, the Kirby on the car. Nintendo Switch Online, which is also like changing and getting better. And where do you see the direction there?
So, at the end of the day, we could talk about all the different options, all of the different elements and angles of what I think is one of the more fascinating ideas I've ever come across in my career. But at the end of the day, it's really, really simple. I think there are two drivers or earnings engines that will determine the outcome here. I mean, if these two things are correct, it is essentially a certainty that this will be a home run. And one of these two variables is Nintendo Switch Online. So why is that? One of the things that they did recently that I think is a genuine game changer was coming out and bundling the DLC of their two biggest games with the largest and most active player bases into their next their higher price tier of Nintendo Switch Online. So historically, NSO came with data storage for the cloud, NES and SNES games. Kind of a bare bones feature for a service that even now is still nascent. But then earlier last year, mid last year, they came out with the N64 expansion pack. And they have bundled the decision to bundle both Animal Crossing DLC and Mario Kart DLC into the higher priced $50 tier versus the 20, I think is a game changer on several levels. So let's kind of think through the math here on like a super basic level. So I think the installed base for Mario Kart 8 Deluxe is got to be, I think it's through the rear view 44 million. It's probably over 45 million right now. But if you assume, let's call it 20% of that installed base purchase this DLC. So if you already have online, upgrading is a no-brainer. And keep in mind, this is we're thinking of the most active, most engaged players out of those 44 million. Basically, I think that's like 7.9 of the pull out. I never do math in my head for obvious reasons, but assuming 15 to 20% of people that play Mario Kart will upgrade to NSO Online is a huge deal. Right there, you're looking at between that and Animal Crossing, and so they released the announcement with the N64 expansion pack that the Animal Crossing DLC would be bundled in for free. If you assume 10 to let's call 15 to 20% of that player base buys the DLC, and you don't have to differentiate between online, whether they have the $20. But the point is this: is that somewhere between 10 and 15 million people very easily, probably upgraded increment, at the margin, somewhere between 10 and 15 million new subscribers came into being for NSO at twice the average ARPU. So through the past, up through November, the last time they reported, we had 32 million subscribers for NSO. That was approximately, I think, a 34% attach rate. If you add the likely uplift to memberships at the higher ARPU from bundling these marquee DLC IPs, and again, the games that are the most, the players that are the most engaged, playing the game that are the largest games in Nintendo's library, it is a reasonable assumption that something on the order of 15 to 20% do that. If you do that, if you assume both of those, I think it's like 16.5 million. 16.5 million times 50. I mean, the readers can do the math, but the bottom line is, basically every dollar of revenue from these, subscriptions to this higher price tier is pure margin. So I think I have the. Let me see if I can.
825 million. It should be.
Let's see here. I think I actually. This is part of the letter.
So again, an idea to look into the letter.
So, where are you?
It's a long letter for sure.
About 90 pages, which is slightly obnoxious.
Epic.
But I think it should definitively answer and go through all of the remaining bare arguments in kind of systematic detail.
It's your Super Mario thesis.
Yeah, at this point, I might as well, it's like a book, but it is definitely worth it. Anyhow, the point is this: I could pull up a calculator. 16 million new NSO subscribers at the margin, is upwards. Let's just simple math. It's $1 billion. It was doing 600 million before, and just like that, not only does bundling these DLCs again of the biggest franchises Nintendo has with the most engaged player bases for free, drive a step change increase in the attach rate. The incremental profitability that falls to the bottom line, and if you put a let's call it a 20 times multiple on that, is that in of itself is worth about the entire enterprise value today, and that is just reaching parity on an ARPU perspective with the absolute low end of Microsoft and Sony. So, it's that we're assuming a $60 ARPU, which is as low as it gets, essentially. 50 actually. Now, the more interesting thing is, I think, what Nintendo's demonstrated actions tell us about the future. We know Breath of the Wild 2 is about to be released. It's been 5 years since a Mario game has been, Mario Odyssey was released. So that's in the pipe somewhere. We just had a Gen 9 Pokemon game, released on top of Legends Arceus that's going to hit this year. I could go on and on.
Kirby.
Kirby. Switch Sports is going to drop, which was, granted it was included in the Wii package, but Wii Fit and Wii Sports and their sequels are like 4 of the top 10 best-selling games of all time. I mean, Nintendo is literally carpet bombing their users with the greatest software lineup in the history of what they've done. And I am certain to a relative degree that what we've seen them do with Animal Crossing and Mario Kart here is going to be what they're going to do forward. So imagine the GameCube tier, the GameCube expansion pass. And along with that GameCube expansion pass, you get free DLC for, Breath of the Wild 2, the next Pokemon game, and the next Mario game, or, say the next Mario Kart. But plus the GameCube games, plus another vintage system, like they did with the Genesis. But the point is by bundling the DLC, you not only get a massive increase in memberships at much higher ARPUs with relative certainty, but because the engagement, will grow along with that. And in video games, there's a kind of a linear, direct relationship between engagement and profit per user. It's not that hard to see the future, look at the established game plan that they've been executing against so far, and imagine, let's just call it we'll stick with the N64 or the uh, GameCube expansion pass. Just there, if they bundle those 3 or 4 DLCs over the next 2 years, I can get to roughly 52 million. I think Sony's right now at 48, but I wouldn't be surprised if they are at parity with Sony now, just from Mario Kart and Animal Crossing. But this is the bottom line. Do you think that it will be hard for Nintendo as they layer in all these new vintage consoles and retro kind of classic games, all these new live service games like Tetris 99 and Pac-Man 99, these marquee DLC IPs that are going to sell 30 million a pop, easy, each one of them? Where are they going to price it? My guess is right around 100, so right beneath where Sony and Microsoft are for their kind of absolute low end online services. When you're talking about, I'm not talking about Xbox Live or PlayStation Plus. I'm talking about they. I think what the next iteration here will be the expansion of something more like Game Pass. Um, if you think that they can get to 52 million users memberships, and you think that the ARPU from each, as they kind of build on top of each other, will be, call it 100, right there. You have the entire value. Slap a 20 times multiple on that. You have the entire value of the business today. I think that is um, basically a certainty. I love to debate it with people, but if you believe that, the stock's a home run. And this gets to the next part, which is, arguably the most important, which is the ongoing transition to digital that Todd had mentioned at the beginning. Um, and people forget that everyone's already done this before. If you look at all of the software developers, the amount of their mix, split between physical and digital. So Ubisoft, Take Two, Activision, roughly, let's just call it 80% of all their software sales are already digital. Sony's is, I think, 85% digital relative to physical cartridges. Uh, you know, I could we could kind of joke around and I'd say, tell me, when was the last time you bought a CD? Yeah, when was the last time you bought a DVD to watch a movie? We could, when was the last time you bought a computer with a disk drive in it? There are so many analogs in entertainment media specifically. In fact, I saw an article the other day where Best Buy is now starting to shrink and remove the video game section from the square footage of the stores. The point is, 5 years from today, in the long run, uh, physical media is dead, and this is absolutely true in video games. So if you believe that 5 years from today, Nintendo can catch up to where basically everyone, whether they're console peers or their publishing peers, basically catch up to where they are already today. The impact to profits is, just it's nuts. If you, for example, let's not even assume any further growth in the active installed base, and we simply take management's estimates for this year, 2021, fiscal 2022 for Nintendo. I think they've guided for 220 million units. Okay. I have the math broken down, in the letter that will be released with this, that anyone's, more than happy to go through. But if you assume that the digital physical mix was the same as it was for all of their first party publisher peers, or their console peers, and you take that pre-tax profit, I go through the difference between first party and third party and kind of walk through the economics of what the margins are on um, physical package discs, and kind of as their distribution and production costs basically dissipate to zero. Basically that results in a incremental $23 per game that drops directly to Nintendo's bottom line. You do all the math, and what you get is at 20 times, just based on the physical to digital musical shift for the software they're going to sell this year. I think it's 74 billion at 20 times. So, uh, right there, just from this one lever, you get a kind of crazy outcome. And I say crazy because of the predictability factor here. I mean, there are a lot of high quality businesses. The thing that makes me excited about ideas is not only where, they a great business, and I think they have a widening moat, and a lot of the things that, all intelligent investors, I think, emphasize. For me, predictability, and estimating a business's medium term earnings power, handicapping those outcomes is very, very important. And so, with this, it's rare that you get something that is, I think, a certainty over the next 3 to 5 years, that has the ability to, call it, double the stock on its own. And then you add NSO, which simply by catching up to what everyone else has done, you get another double from where it's priced today. Yes, yes. And so then you get the movie. Yeah, I mean, and you just lay. I mean, if you break each earnings engine and isolate it, and these are things, whether Nintendo's going to get tickets, royalties on theme park tickets is not in doubt. I mean, 40 million people go to theme parks every year. You can't see it in the financial statements, but, I don't think there's really any uncertainty to the fact that this is going to be a very valuable business to Nintendo. I don't, and I've at least never heard in the public domain, whether on Twitter, I've never heard anyone attempt to argue that as Nintendo continues to continuously add value, it's spending 2.7 billion fixing its technical debt and online infrastructure, expanding its software output, its decision to bundle these DLCs. I mean, the idea that Nintendo can't get to, call it, 50 million NSO subs at a average ARPU that approximates its peers, this is not a high bar. I think it's a certainty, especially with the DLC strategy. Um, it's a slam dunk. The transition to digital is a slam dunk. Figuring out, you quibble over whether the royalty on ticket sales for theme parks is 5% or 10%. There's no real discussion about whether there's a royalty. So, again, this is a very predictable outcome. It is very easy to handicap. You don't have to be a genius. You could do the math on the back of an envelope. You don't even need to build a model. It is very simple, and I think, truly common sense. And I think that's the thing that kind of astounds me about the current price is, this is not, these are not kind of wild ass guess bets. These are almost kind of, I think, like insultingly low bars for a company that has a pedigree like Nintendo to reach. And if you know, grant these premises, you have to grant that, the stock is kind of grossly, disgustingly mispriced. And I think that is exactly where we're at. I think Nintendo's going to be huge, or the movies and TV, segment will be huge. I think merchandise sales, I think it'll be slow and methodical. I think that's going to be a big business. Theme parks is going to be a big business. When I, talk about the 74 billion figure that I arrive at in the letter, that's based off of this year's software number. And 5 years from today, it is an absolute certainty that the active user base is going to be considerably higher than it is today. You can play with the numbers all around, but the numbers are huge, and they are not, I think, disputable at this point. I mean, the future is always uncertain, but Nintendo continuing to follow its plan with NSO, given here we are 3 years in, we've seen them execute against it so far. They're just going to keep doing what they've been doing, and that's going to be a transformational game changer for the business as they keep growing the attach rate. And one thing I should note with all this stuff, um, none of the things that I think are embedded in these 2 to 3 variables are things we haven't seen before. If you want to think about this a basic sanity test for saturation, you can look at it a couple ways. Historically, on the hardware side, Nintendo has never had a family of portable devices that have sold less than 200 million units, ever. You could flip it around and do it a different way. The Wii generation, just this singular generation between the Wii and the DS, I think they sold 330 million hardware units. I think the more fair, like the truly apples to apples as the bunch, would be to take what they've sold the last 3 generations. So the Wii, the Wii U, and I think it's 443 million. So here we are today, given the installed base, is at 100 million. If I'm right about the iterative hardware model, there's an amazing amount of headroom to run on the hardware side. Software side, make this real quick. In 2009, I think they sold 400 million units of software. I'll rest my case there. The tie ratio that you want to put in there, put it at 2, put it at 1.9. It doesn't matter. The underlying assumptions of, and this is right now, I'm kind of referring to the 2 models in the letter. But hardware, we're not even close to saturation. Software, we're not even close to saturation. Nintendo Switch Online. Daniel and Matt has some great charts and data points here, but historically, PlayStation Plus memberships have grown, in a linear fashion with the installed base, the size of Sony's ecosystem. And these, the amount of members has been basically impervious to external factors, recessions. And, I guess we've had basically a 13-year bull market, so that could be tested in the future. But all of the evidence, we could just leave it here. Xbox Live has 100 million users as of a year ago, so not even close to saturation. What's the others? Then I've kind of already ranted about the digital, but when you get into the reasonableness and you're intellectually honest about the underlying assumptions that underpin the core drivers of the business going forward, I just don't see how you can look at a business today that has the best IP portfolio in the history of video games, that are the most devoted, brilliant art. The Switch games for, since 2000, they are, all of them for the most part, works of art. They've never been hitting it, doing it better on the software side. I could go on and on.
There's also this potential to raise prices. If you think about Disney Plus, I just have the subscription for 3 years now, and every year they raise the price with 10 euros a year, and Nintendo is just doing the same. It's also a playbook they copied, and even coming back to the Best Buy argument you made on the decrease of video game space, we also have Economy, which is MediaMarkt Saturn in Germany. Mm-hmm. They also decrease the space that is available for video games. So Nintendo still could, even if they stick with the cartridges they have, they even could say,
just
okay, we're selling
inside.
you the cartridges still, but with a premium price. So they even could rise prices there. So there's so many, yeah.
Yeah, there's the amount of monetization levers that they have at their disposal is nuts. I mean, like there is no lack of, I think, ideas that at Nintendo that make this um, you know, make their growth plans work. And I'll say one more thing about the end of physical media, certainly entertainment physical media. There's actually in the letter we linked to an Ars Technica article from I think a week or two ago, and in that article, um, they basically show I mean, basically the amount of game developers, indie, multi-platform, you name it, that are actually even going to the trouble of creating physical packaged games is basically at an all-time low and dropping through the floor at the exact same time that the total number of parties released is exploding. And they go into the charts, the details. But again, when was the last time you bought a DVD? When was the last time you bought a CD? When was the last time you bought a computer with a disk drive? This is not something that is not predictable. It is by its intrinsic nature very predictable. As this transition plays out, the value creation bonanza to Nintendo is uh, it's ridiculous relative to the current price. It's worth more. The incremental pre-tax profit is worth more than what you can buy the entire enterprise value for today. Um, One of the things we haven't talked about, and I know we're running out of time, and I got a long day. I know you got important things to do, but the other element here is corporate reform. Not only internally as far as capital allocation in general, and specifically, I think the most impressive and important element of kind of recent revelations was them pulling the bazooka out and putting roughly $4 billion of work towards uh, uh, future growth that I think will generate very very high returns. But not only is it in have they I think they've proven themselves that this idea that they are just your classic Japan Inc. Management team that are content to simply mine the store as cash piles up, and that they don't care about shareholders. I think it's nonsense. I think they've just, not. This isn't them just speaking, making verbal gestures that they're going to be reinvesting for growth. They just put $4 billion of their cash pile to work. That speaks for itself. On top of that, they put roughly $1 billion, towards a buyback. I think that speaks for itself. They have in November they released basically 2 pages where they outline where this $4 billion is going and the various ESG and related elements. There's a big technical capital flow element to the thesis. Not only from the internal stuff that they're doing, but we've gone back and forth and talked about the corporate reform that is happening in Japan. Most people don't know this, but on April 22nd, a series of government-led corporate reforms all basically take effect, and they have, for the first time in history, targeted all the right things, and there are real teeth and consequences to these changes. For example, companies will start to have to explain to the government why they have cross holdings. Basically, these various reforms in total are, I think, game changing. There's no other way to put it. I think the court system is on board. Given Japan's demographic crisis, and there's no other way to put it, the only way that they can, you know, there's only one way forward, and that is increasing the, if they want their economy to grow, they have to unlock value and increase the efficiency of their capital markets. There's a reason you see Buffett buying the commodity houses. There's a reason why KKR and Carlyle are jumping in with both hands over feet. I read a great discussion from, I think it was a Columbia talk from 3 or 4 months ago, that had the brilliant woman that runs Soros. I had not heard of her before. I hate that I can't remember her name. I loved everything she had to say, but she talks about this. But as all of these old line, you know, uh, everything that is in people's mind's eye that represents Japan Inc. A lot of basically all of that stuff is going away, and you have half the topics trading beneath book value. Uh, there's a bunch of articles that I list that provide further context and go into the details, but I think you could see private equity have just feast, over the next 10 years, like it was the 50s and 60s here in the U.S. So, Japan as a nation is doing all the right things. Nintendo as the natural brand ambassador, call it the Japanese national champion, is the perfect poster boy of all these corporate reforms. The relative valuation between, Japan, let's call it its earnings yield, relative to other developed nation is at an all-time high. Cumulatively, I think not only will capital start to flow back to Japan as they, reforms when it comes to capital management, corporate governments, all these companies have to have, I think 60% of the listed companies will have to have majority independent directors. I mean, these are things that have very real teeth. And you add that into Nintendo and the change in the business model, the dividend that they pay out, and the fact that you know they're going to start. Even if you just look at last year, I think their operating margin was 37%, and you don't extrapolate any growth, aside nothing to the embedded margin and expansion and growth from the transition to digital. I mean, I could just go on down the line. If you just take from last year and you roll that forward, I think that they should generate something like 20, 25 billion in excess cash after dividends. So when you get into and you really understand what's going on a corporate reform level as a whole, then you have a question of, is Nintendo just going to keep letting these billions of dollars, pile up? It's got to go somewhere. And that was one of the other really interesting things about the November presentation was I don't ever recall management explicitly stating that buybacks are always on the table. Dividends have been paying pretty consistently, but when you understand the cultural dynamic, the backdrop of the nation and Nintendo's like a loyalty and place within that, not only does all of the very shareholder friendly things that they've done over the last year start to make a lot of sense, and all of the ways that they're seeking to unlock value by uplisting to the prime market in Japan. And you sent me that wonderful thing on Italy, right, where they basically did something similar. Not only is Nintendo all of a sudden,
yeah. The star segment of the Italian stock market was outperforming in many dimensions.
Mm-hmm. Like they're Japan as a whole is doing what works, and then Nintendo itself is starting to do smart and creative things with their capital. And if there's a sensitivity here table in the letter, but you can assume various price points of where they buy it back. But Nintendo could easily buy back 20 to 30% of the market cap, and in fact, I think they kind of have to. Otherwise, the cash piles up, and then they're Japan Inc. And there's no way, given the movement, at the board level, everything that they're doing. The whole point of these reforms is for that Japan Inc. mindset to go away. For like just allowing private equity to come in and start, buying these companies up. The unwinding of the cross holdings, like all of these things are deeply consequential. And if you don't assume Nintendo does anything but simply buy back stock, with the cash flow it generates in excess of the dividend it pays out, so basically in an amount that is in line with its annual earnings power, the results are impressive to what that does to per share value. And I think no one sees that coming. I think it's time, like, all of the old arguments about Nintendo and capital allocation are, I think, no longer, if you apply analytical scrutiny to them, are no longer defensible. And I think that's really, really exciting. So, you can't talk about the, capital allocation. You're never going to get the cash back and it's trapped cash. None of that stuff makes sense anymore. And I think that's exciting. So, I could keep going, but
people still have to read your letter. So
yeah,
I think
right. Yeah,
we should just make another advertisement for your letter and say it will be soon out here. It's available through the link below, and people should read it because we've covered a lot of great points on Nintendo. Thank you very much for coming on, and also thanks to Todd, who already had to leave. It was a fun conversation. Besides, we had some technical hiccups, but yeah. Thank you very much for coming.
Anything else that we didn't touch on high level that we've discussed in the past?
If you want to add something for the end.
Not there's a lot of things come to mind, but I think we've covered it pretty well. I'll just say I'm very excited for the next year. I think we'll find out a lot of the kind of questions that have hung over in the air and been, I think, reasonably up for debate for a long time. I think, there's going to be a variety of catalysts that settle those questions. And one way or another, we're going to find out whether Nintendo's the platform business that, I think we both think it is, and whether it's not. So I think at a minimum, it should be a very good, it won't be this agonizing back and forth between a 20-year-old, 30-year-old narrative that just won't die. And, what I think is, we'll call it new Nintendo. And I think that is very, very exciting.
It is. It's a very interesting point. And it's fascinating on which valuations Nintendo still trades and how much the market ignores it. But maybe that's then a topic looking back after 5 years, what of your thesis came true. I'm happy to follow up again in 1 year or so.
Well,
so we keep track.
I'll leave at this. I think the scenario is much like, again, analogous to Apple in 2011. I mean, you had, if we had a dime for every time, it was just a hardware company and low cost, Samsung phones are going to eat away its margins. It was, quite possibly the worst hot take, of all time. And, you had guys like Michael Dell saying they shouldn't be in business. Harry Blodgett saying that the iPhone is dead in the water. Here we are 10 years later, and Apple's the biggest company in the world in terms of market cap. And I think this situation with Nintendo today is a lot like then. The market doesn't appreciate the software and ecosystem aspects of the business. And I think when we, look forward, in time, there's going to be a widespread general recognition of not only the quality of Nintendo's IP and their skills to create software, but a much higher multiple on dramatically higher earnings that reflects, what the business is at its heart. And just like Apple, there's periods of multiple compression and expansion, but hopefully we won't still be fighting this 5-7 years down the line like Apple did. But I think that, eventually the truth will win out and earnings will grow. And, that's all we need to do quite well. So
it will be quite an interesting story to follow, and we will see.
Yep.
We're all right. That's the thing we have to wait for.
Yeah.
Thank you very much for coming on, and thanks for the audience to staying that long. As in every video, also here is the disclaimer. You can find the link to the disclaimer below in the show notes. The disclaimer says, always do your own work. What we're doing here is no recommendation and no advice. So please always do your own work. Thank you very much.